Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla finishing the first week of the year. Not the best way to start the year, that's for sure. But nonetheless, let's talk about it, what's happening, what we can expect moving forward, all that good stuff as per usual. So as usual, if you enjoyed, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below for $3 a month. In the description. $3 a month, you get access to my updates, thoughts, posts, etc. on Tesla. Sometimes I do write these kind of bigger ones like this, etc. So if you're interested, the link is below. Again, just $3 a month. Try to make it very, very reasonable. At least I think it is, but whatever. The point is, if you're interested, it's below. But jumping right into it, Tesla closing the day, unfortunately, once again, pretty much down. I mean, it's a white candle. I guess in this case, a green or white candle. I changed the color, as you can obviously tell, I'm sure. But still technically closing down about 0.2%, which is going to be putting us at about $237 per share, which is, not a great sign. I mean, compared to the market, definitely a little bit of an underperformance, but hardly much at all, really. I mean, pretty much flat, like the market itself, QQQ pretty much up 0.14%. So, not the best, not the worst thing in the entire world. The thing that's, I guess, not great, though, in my opinion, is the fact that we are, of course, still unfortunately closing lower lows, essentially. Like we're closing, yesterday we closed lower than the candle prior to that. Today we closed lower than the candle prior to that, which was yesterday. So, we're constantly closing below these levels, which isn't great. Came up to 240, clearly acted as a resistance. Not ideal. There's obviously, like pretty much yesterday, good and bad news. So let's go over all that right now. Let's go over the good news first. I think yesterday we started with the bad news. So today let's start with the good news, right? So obviously, we're still retesting the bull flag, right? Again, the way I see it over here is we're still retesting. Oops, I don't know where this. Sometimes I need to lock these. Sometimes I feel like I need to lock these things because I keep moving them by accident and it's very, very annoying. But nonetheless, we're still essentially retesting this bull flag, right? If I zoom out over here, you can see still retesting the bull flag. That hasn't really changed too much, right? Came up, broke above it, got rejected by these lines over here that I showed, right? Which was this, a blue line from all the way down here. We've talked about it many times, constantly got rejected by it, ended up essentially creating an ascending wedge, came down, and this ascending wedge breakdown, which, like I said before, many, many times as we were in it, is a bear, usually ends in a bearish way, right? You're bullish inside, bearish to kind of like exit it. More often than not, that's what happened. And this exit of this wedge essentially is, my cat's like being very uncooperative, pretty much is what gave us this retest down to this bull flag, right? The bull flag breakout. And so far, it's not looking too bad. I know the retest is kind of scary. It's not looking, it's looking like we're on thin ice. And in my opinion, we kind of are. But, so far, at least in my eyes and on my chart, we are testing the retest of this bull flag. Again, some people are saying that we broke back into it. I guess you can make that argument, but I personally wouldn't, right? Because the way I look at it is pretty simple, right? So you take the line again, and ideally what I want to do, I want to touch as many of the candle wicks as possible without actually having the line cross over any wick that has closed above, right? So as you can see, this red line that I have right now for the top of the bull flag, no candle wick other than the one that broke us out closed above it, right? No candle closed above. We touch as many wicks as possible without crossing into a candle that closed above it. That's the way I like to do it. Some people are doing it where they're touching just barely the top of, the super duper like top of all the wicks, like as absolutely possible. And I guess you can do that. And in this case, you can argue that we broke back into it, but that's not the way I like to do it. I mean, this is one of the ways, right? But in my opinion, you can also have both of them, right? And technically, we're still, in my opinion, within the respectable realms, if you will, of still considering this to be a retest without truly breaking back in. That's the way I personally look at it. That's just my opinion, right? Maybe I'm wrong. Maybe I'm the weird one. Who knows? But that's the way I'm looking at it. And that's the way I'm going to continue looking at it, right? Now, on top of that, since we're still, of course, retesting this bull flag and we haven't, in my eyes, broken back into it, we also are still just barely closing and holding above this VWAP right here, which is going to be this blue line right down here. Let me remove all these other ones for now. We'll bring them back soon as we talk about them. But, we are, of course, closing above this VWAP as well, which is, of course, like I said, this blue line ever since the pretty much trend change, if you will, from all the way down here back at almost, $200 per share, right? We're still touching that, bounced off of it a few times, including over here. And so far, we're pretty much just barely hanging on, but still closing above it, as you can clearly see as I zoom in. So those are the good news, right? That's not too bad. But there's not much more other than that. I mean, but that's pretty important. I mean, we're still above the 200-day moving average, right? Which we'll talk about soon. We're still above that, which is good to see, right? And we're still above the 50-day moving average as well, which we actually did bounce off of today, as you can see, almost directly as well. So, that's not bad. But of course, we are below the 100-day moving average and of course the 21 EMA, which are these two yellow lines essentially above us, 100 being the closer one, 21 EMA being the slightly farther one. So we're kind of now in between these pretty two important areas, right? We're right on the VWAP, but slightly above it, so it's technically a support still. 50-day moving average is the support, and worst case scenario below that we still have the 200-day moving. 50-day is the support, and below that we have the 200-day moving average at about 230 per share, which is pretty significant support, at least in theory. So that's good. Obviously above us, 100-day moving average and 21 EMA, also pretty important resistances to break, right? They're definitely, especially the 21 EMA, definitely want to be breaking above that sooner than later, ideally. But we're pretty much kind of, in this limbo land sandwich between these pretty substantial resistances and supports. So that's kind of the situation we find ourselves in. The squeeze indicator is still squeezing. It's still showing red circles on the daily and on the weekly. So that's, make of that as you will. It's quite a lot of red circles now. So we're definitely squeezing quite substantially here, which, once this decides to finally pop in a direction, that's going to be important to understand. My cat's here. But take a look at the weekly very quickly. I don't know if you guys can see my cat. Can you see my cat? Yeah, she's walking around. Thief, I'm trying to record. One thing to look at over here on the weekly is pretty simple too, right? So on the weekly, same concept, right? We're obviously retesting this bull flag breakout still, as you can see, right? We're still very much here. We're still above the VWAP, et cetera, et cetera. But the reason I brought up the 230 level, oh my God, the reason I brought up the 230 level is because that's, like I said, on the daily, that's where the 200-day moving average is, which is, obviously important. But it's also happened to coincide where roughly this green line right here also happens to be, right? Like same concept from all the way down here where the trend really started, as we touched all these wicks over here, we're touching several wicks, 1, 2, 3, 4, pretty much wicks that we're touching. This also lines up roughly with the 200-day moving average, where if we do slightly break below, let's say maybe next week into this area, right? And let's say we do move down to about the 230, give or take, of course, a couple dollars level. That's going to be potentially a bounce right off this green line, potentially a strong bounce as well. That could shake a lot of people. Like that wouldn't shock me if next week we actually do move down to about 230. Wouldn't completely shock me, especially with a bit of a weak close here, in all honesty. Wouldn't shock me. But again, strong bounce off of the trend line here, and of course off of the 200-day moving average. Now, with that being said, if we start losing 230, if we start losing the 200-day moving average as well on the daily, well, that's where, in my opinion, things will start not getting so good. And that's where, in my opinion, the bullish thesis really starts to fall apart. And that's not what I want to be seeing. But ultimately, the way I look at it on the weekly is we're pretty much sandwiched in between the top trend line over here, the final boss trend line, and essentially this green line right here that is acting as a potential final support. And if this breaks, I think we'll be coming down to at least 200, if not probably re-entering the 100s as well. So that's important to also understand. But I'd be pretty surprised if we come back down to about 230, give or take, and don't bounce, at least even a dead cat bounce. That would honestly surprise me. And if we just collapse through there and just continue falling for the next month or two or something like that, that would generally surprise me. So we'll see. Keep in mind, these two red candles, they are shorter weeks, which is why some people do pay attention to this. And they're saying how, there's not a lot of, let me go ahead and remove this. There's not a lot of conviction in this, these two pretty decent red candles that we've had this week and last week. And they're pointing at the volume, saying how the volume is really, really low. Usually when you have these kind of massive candles, whether it's a green or red candle, but a very decisive looking candle when in whatever direction, whether it's bullish for green, bearish for red, in this case bearish, but you have it on low volume, that usually implies that it's a trap in that respective direction. In this case, a bear trap, because of the low volume. It implies like a quote unquote low conviction move. Keep in mind though, both of these weekly candles are on shorter weeks. Last week and this week, if I'm not mistaken, last week was also a shorter week, right? I believe, if I'm not mistaken, I'm pretty sure it was. So, that's probably part of the reason. Even then, it's still pretty low volume, but that is definitely part of the reason. So take that into account as well. The MACD is still sideways on the weekly, right? Still not looking like it wants to go really anywhere just yet. It hasn't really picked a direction. We have been playing out this bearish crossover, which ended up actually being a factor, right? So that's important. However, on the smaller time frames, we are starting to still see those potential bullish divergences and even hidden bullish divergences. So the hidden bullish divergences, like I said yesterday, we're making lower lows on the RSI, but the stock itself is making higher lows. That's a hidden bullish divergence. And if we zoom in a little bit closer just to this little area right here, in my opinion, we're making potentially a bullish divergence as well in this little time frame. And the reason for that is pretty simple, right? As we're pretty much making lower lows, arguably, right? Obviously, all three of these specific red candles are obviously lower lows, but the RSI itself is pretty much going sideways. It's not really making lower lows. It's not the most convincing bullish divergence, but it's still a bullish divergence. It's a little more convincing on the smaller time frames. You can see here, same concept, right? This little situation we find ourselves in, pretty much making lower lows, if not the same lows. RSI making pretty obvious higher lows consistently, which is good to see. Same thing on the 15-minute chart, same idea, right? Pretty much making lower lows, RSI still making higher lows as well. So we have some nice bullish and hidden bullish divergences setting up on the smaller time frames, which is a good sign to see. So if there is a place to bounce, I ideally would want it to be here. And if we drop any lower, I don't want to go much lower than pretty much below the 200-day moving average. And I want a strong bounce from there. So if this were to happen next week, I'd want it early on in the week so that we get a strong bounce and we still have enough time to have a weekly candle close above this bull flag. So for instance, it can look something like this. I can't really draw on this, but let me open up TradingView. Actually, I might be able to draw it a little bit better, just to kind of give you a rough idea. I don't have this, my chart isn't as good on this, so keep in mind it's not the best looking chart, but I believe this should be the 200-day moving average if I'm not mistaken. Let me go ahead and, yes, it is. So this yellow line right here is the 200-day moving average. Again, not the best looking thing in the world. I mean, it pretty much looks something like this right now on my other chart, right? Something like this. But essentially what I wouldn't be surprised to see next week, if we get a candle that looks something like this, right? Let me go ahead and move this a little bit here, where essentially pretty much we get a move down, we get a nice long wick. Let's say, pretend this is, boom, it moves like this. That's the 200 moving average. It's, it's doing its thing like this, right? It moved because, obviously it keeps moving every single week, right? Slightly up towards us. And then let's say we open pretty much right around here, let's say give or take, and we have a nice long wick like this. And then we bounce off of this, we come down, bounce off of 230, something like this. And then we move back up, and then the candle ends up looking like something like maybe, what is going on? I'm trying to draw it, but it's not like letting me draw it. Whatever. Like, this is the weirdest looking candle, but it looks something like this, something like that, right? Where essentially we get a massive drop, maybe like early in the next week or something like that, get a bounce off of the 230 potential area, strong bounce as well, still close back above the bull flag for the weekly candle close. Keep in mind, this is not a weekly, this is a daily. My goodness, whatever. But that's kind of the idea that I expect on the weekly. I guess I'll do it one more time on the weekly. Actually, no, 200 days below. Sorry, daily is the right one. But yeah, ideally I want to close above the, so that was the right one. Sorry, I lied. Can I redraw like this one? All right, I should redraw it. I'm not going to redraw it, but you get the idea, right? Long wick, bounce back up, signaling a strong bounce because of a long wick, and then potentially even set up a hammer candle that looks something like this. And we essentially get a nice, beautiful, strong bounce off the 200-day moving average. Hammer candle signaling a potential even stronger reversal, which is great to see. And I think that'll look overall pretty good. Again, not saying this exactly will happen. Maybe we just straight up just bounce right away. I'm not really sure. Obviously, no one knows for sure. But something like this wouldn't surprise me. Shake out more hands, get a pretty potentially looking bad situation similar to what this candle was back here. Actually, this is a perfect candle. This is exactly the candle I was looking at. Yeah, this is pretty much what I'm picturing. Remember this candle that we had not too long ago? This one right here, this white candle right here. Remember we dropped down well below and then we still closed above. I'm pretty sure it was this candle. Yeah, right? You remember this, right? I'm sure you guys remember this, right? And then look what happened. Actually, no, it wasn't that one. It was this one here, right? This one right here. Same idea. I pretty much, potentially expect something like this happening next week where we have this pretty much exact looking candle more or less as we drop down to this level of 230. Also have it leave a long wick and then we bounce, have a strong finish, potentially set up a hammer candle, and everything looks good for a potential reversal. That's kind of what I'm seeing right now. So until we get that, I'm still going to be waiting. If we do reverse, I obviously expect to, break above 240 to 242, and then of course 245, and then I want to break back above 250s, right? There's obviously a lot of levels to break back above, but one step at a time. Let's focus on first finding the bottom. Once we find the bottom, we'll talk about where potentially we can reverse. But we are still hanging on to this higher volume area, pretty much right around this, high 230s area that we currently find ourselves in. So that's important to understand as well. But that's kind of the main thing I'm looking at right now. That's the main things I'm seeing. Yeah, a bit of a pickle. Definitely a little bit of a pickle Tesla finds itself in. Not the strongest bounce. I mean, the market's been all over the place, also kind of like Tesla. But, I still think we're barely hanging on to where it really, really matters. And I'm not too upset about it. I'm not necessarily happy, but I'm not super upset about it either. Could be better, but it's looking pretty okay for now. And we're still hanging on to where we need to before potentially things can get a lot more bearish if we do start losing certain levels that I just talked about. But all in all, that's what I'm seeing. If you have any questions, whatever, leave them down below. But hope you have a great weekend, and I'll see you hopefully for a better week for the bulls next week. So until then, have a great weekend. Peace.